Good morning and welcome back to the Opportunistic Trader for Wednesday, September 12th. Kind of not that busy overnight in U.S. markets relative to what they have usually done. But I want to start out going over yesterday's action. I would have to say that utterly surprised at the market rally. The market actually took out the lows of the move at 9:30 to 9:40 in the morning, and then proceeded to explode 25 handles and 250 points in the Dow very, very quickly. And it'll be interesting today because the mantra is still the same as what it has been. Chinese markets are down in Asia 10 days in a row. They're down 20% on the year. The Nikkei was lower. Cash might have been slightly higher, but the futures were lower. And then across the board in Europe, the DAX is actually flat. It's up 11 points. Cash is a little bit lower, and it's actually about 25 points lower than the late settlement. So it's actually, again, down, even though it's showing up. And it's just interesting to see this trend continue. And I don't know, exactly what's going to happen, but something's going to give here. I like the trade of being long these other markets that are beaten and shorting NASDAQ in a mean reversion trade, but obviously it hasn't come to play as of yet, but we're going to keep our eye on that. As far as trades that we did yesterday, we got caught short in the crude up explosion that rallied at about $1.70 because, as Vince would say, it's because of the hurricane. But even though the hurricane is
that's
hitting,
what Bloomberg told me, Larry.
and that's what the headlines were saying yesterday. So I'm not understanding that, but it got the market moving. And then obviously someone had the weekly numbers that came out last night that showed a bigger draw than expected, and the market rallied another 70 cents. So we're trading at about $70 a barrel. I'm basically short from 69.40 and change. I'm going to give it up to 70.40 to stop out, and hopefully we'll be able to capitalize on this trade. The other trade that we left open yesterday was S&P's being short from 28.89 and a half. We're in the money slightly on that, so I'd say so far the day is a bit of a wash. But I mean, I think today we could see some weakness, especially after Apple comes out. I mean, I'm not really expecting much. The phone's probably going to be exactly the same with a bigger camera like they do every time. I'm just not quite sure why they can't be more innovative, but I guess it doesn't matter to the stock. It goes higher no matter what. So, those are my thoughts on the overnight trade and yesterday's trade. Really, the takeaway from yesterday was that the S&P exploded off the low. I think it could be interesting today if we trade down about 10 handles. Could get skittish because even though the market rallied 25 handles, it was down 15, closed up 8. We'll be lower day over day at that point. So that's a good area to look for, potentially for stops or for some good trading. The NASDAQ continues to outperform again, as it has through this whole move. Looking at the stocks, FANG is mixed today, actually. You have Apple up. You have Facebook down, what Apple's up. You have Netflix up, what Google is down. And then the other stock is Amazon, and it's up $4, which is like as you would say, bid offer spread. So can't really get
Right.
too much there. Stock that I do trade a lot that's coming into a buy area that I think would be a buy is Micron Technologies. I think the high of the year in Micron is over $60, and it's trading at $41 right now, $41.86, down another 4% today. So I don't know if DRAM or what's going on in the chip sector, but it's interesting that the NASDAQ isn't down more because I don't see very much up other than Apple. And as far as the broad market, S&P is down 2, but it's really not down 2 because it ran about $3 on the bell, so it's pricing at about fair value here. NASDAQ's a little bit above fair value. Again, volatility still in futures is sticking above 14 and then out to 16 in the farther out months. So it'll be interesting to see how, in fact, this plays out, because markets have made a new high in here and volatility is literally 30 to 40% off of the lows of the year. So, still expecting some heavy volatility coming into the end of the month and into October. But we will see across the board, the dollar is fairly flat, down 3. The euro's down 3 pips, and the yen is up 9. So I'd say it's pretty flat, not a lot of action there. I haven't checked what's going on in the EEM, the emerging markets, the EM currencies. Interestingly enough, all of these emerging market stocks in China all hit lows today of the entire move. The FXI, which is a really good tell for China, is trading under $40. It's actually getting crushed. That's an interesting one. And if you look at some of these stocks like Alibaba and Tencent, and all these stocks are within points of the low of the entire move. So it will be interesting to see how all of this plays out. I think today will be a really good trading day. I'm expecting a lot of movement, maybe up first and then lower later. Apple should be a good trader. And it's funny, I want to talk about Apple because like yesterday the stock was up $5 or $6.
Right.
And it's the highest weighted stock. I mean, you're adding 15 billion in market cap in a day. That's like the size of Snapchat plus an
Right.
extra 5 billion. So,
Right.
It trades like an internet stock, which is something that it hasn't done. So it's interesting. I guess it got plastered down from like 230 to 218, so they brought it back $5. But it should be a good trader. And overall, today is an expiration day. Let's scroll over to the straddle, even though we're mid-strike. We'll look at the 85 straddle is pricing in about $10. A little richer than it's been, but not that rich. Yesterday was interesting. Those straddles were $17. Even though there was 2 days, that was a high price, and we actually got a 30-handle move. So
Right.
the options priced in something, and they were right. So they usually are. They're really, for people that are looking at this, it's imperative that you look at options and option pricing when you're.
And just to add to that, I think the emphasis, especially if you're trading actively, day trading type, is that daily or short-term option that Larry focuses on.
Yeah, for sure. I mean, because it's for that day, and there's no, as they say, I don't know where it comes from, but there's no tomorrow. So
That's the efficient option.
Right.
Everything else is weighted by volatility and speculation and predicting months down the road.
Right.
But that expiration straddle is almost always right. I know because I get pinned. I used to get pinned every month from it.
Well, it's funny. You're a net buyer, and I'm usually a net seller. So it's
That's right.
interesting that.
So on average,
if
we're flat.
If we work together, we'd be good. We'd be a good team.
Exactly. There's like
Well,
the guy with
I always loved, it brings me to like a side topic, but it's actually a funny topic, and it works at a lot of hedge funds, and I won't name names, but I had a buddy at a very large hedge fund, and in 2008, he always traded short the market, and in 2008, he basically had on tons of puts and tons of hedges for the book, and he made hundreds of millions of dollars, but the firm basically blew out, and he couldn't even get paid. So the irony was, he was the short hedge, but when they needed him, they couldn't pay him. So maybe, doing that doesn't really work. And
how many times have you heard that before? I mean, back in the days of Amaranth with natural gas, portfolio managers making money. And it's like kind of like, why are you owning gold if you think the end of the world's coming? You should be buying a gun. Same idea.
That's a name from the past. I remember those guys.
Yeah. Well,
they sent out an oil truck as a Christmas gift to all their clients, and then they blew them up.
Oh God.
Oh, I love it.
Financial terrorism at its best, I think.
But it's funny, when I was at Spear Leeds, which was a firm that was acquired by Goldman Sachs, and we were the largest specialist on the floor, and I used to hedge the firm's risk. I used to hedge the entire risk of the firm, and it was like an unenviable job, because basically they wanted the positions that we were put on to lose, because it was only partially hedging their risk. So
right.
at the end of the day, I was like the sacrificial lamb for the for the entity. But
you were the guy buying insurance policies for the whole company, so your losing book was their winning profits.
100%. But what was funny? As time went on, they decided, and probably worked well for them, not to hedge anymore. And I think a lot of firms are like that. They don't hedge. Nobody hedges. Or very little. If you're supposed to hedge like 80-90% of your book or whatever it is, they're doing like 40, because they know the market. They always think the market's going up. So
right, there's a bias there, definitely.
Yeah,
and that's actually, that flies in the face of everything in terms of running a business. If you hedge your book, and this is from my business attorney, if you're a clearinghouse or a specialist and you hedge your book at regular intervals, that's actually a write-off at higher tax rates than your capital gains. So not hedging your book is, I could be wrong, so I think not hedging your book is bad business, and it's poor use of tax accounting. But what do I know?
Yeah, well, I don't know the tax implications on that, but I just know that people don't like to hedge because they don't want to throw away money. People are like, oh, I threw away 20 basis points this month. Okay, well, you made 4%. So what's the difference?
Which brings me to something that's probably going to upset you.
Uh-oh.
No, but this is, I think, the flip side of I talked to, and I'm not going to say this is a reason to get short the market. I'm just going to say this is an example of ignorance is bliss. I talked to a guy yesterday who's brilliant. I won't even say what profession he's in, but he's not a trader by profession. And I asked him what he's doing, and he said, well, he's just managing his family money now. And we're not talking about $1 billion. We're talking about, upper middle class guy who's, got some 401k money. I said, so what are you doing? He said, well, I'm selling puts on stocks. Now, I'm not going to judge. So I'm like, what do you mean you're selling puts? You're selling puts on companies that you wouldn't mind owning the stock on? Like I like Apple, so I'll sell a put, and if it goes down, I don't mind taking it. That in and of itself has risks. But I asked that question expecting at least that sort of a logical, rational answer. And my answer was, not really. I got back, not really. If it goes down, I sell a call. And I'm like, oh my God, he's legging into strangles. And he's been profitable for the last 4 years. I wanted to vomit. And
listen, I have a friend. Sorry to interrupt your story, but I have a
no.
friend.
That's the story. I'm going to the. I'm going.
I have
to
a lot of
now.
friends that sell naked puts. I have a friend that sells naked puts. He's probably, I wouldn't call him a friend. He's a guy that I know through a guy that I'm very, very close friends with, and they wanted to raise money from the outside, and they were just selling naked puts. And I basically said, listen, for you to be marketable, you've got to have a wing covering the option just in case, because you're not investable at
Right.
that
You have to have a
level.
down and out
Well, you just have to know
numbers.
what
What I
your
mean.
risk is. So
Right.
basically, the guy's like, screw that. I'm not raising any money. I'm doing this myself. Well, he's been doing it for basically the whole bull market, and he sells massive amounts of puts in all these names, Facebook,
Right.
Apple, the FANG and whatever. And his thought is what you just said. If it goes to that price, he wants to take delivery. But the funny thing is, when it does go to that price, then he wants out. So really,
Right.
no one
Right.
wants it to go to that price. But it's a big strategy out there, and tons of people are short naked puts, which is shocking to me because
Which, I understand selectively doing that. I really do like this company. So I'm going to sell this put, and I really hope it goes down because I'm a fundamental person. I don't mind I'm going to buy this stock anyway, so why not sell a put? But to do it systematically.
But nobody wants to get put on that. I mean, they're
No, I know.
making it
Just the
as
margin call
right.
itself.
Well, no, but I'm
I
just
don't mind
saying
buying Apple 200. Well, now it's trading 150.
Well, no.
You know.
What they're saying is, hey, I'm selling naked puts, and if it does get there, then I'll get stuck long the stock. They don't want to be
Right.
long the stock, but they'll buy it there. So I get it. There's a lot of that in the market. I think that's a lot of risk that's in the market, but we're gonna have to see how all of that plays out.
I think the Fed has been a backstop, and that behavior has been rewarded, and it's also, I think, depressed or flattened the skew on the put side, and it's probably, muted the volatility spikes as the market drops as well. I don't know. There's a market maker of last resort out there.
I know some people that that are, I would call them day traders, and they're trading like all these stocks that are moving, and it's funny to me, they're trading like Apple, and then when Apple comes in, like they're buying it all day. If it comes in $1, after it ran 7, they're freaking out. I mean,
right.
literally freaking out. So, I mean, I don't think any of these people have ever seen anything real that has ever happened in the market where, not only Apple goes down $1, it drops $5 in 2 seconds. I mean,
Right.
that stuff, it's just so off the board, but it may come back to haunt some people, going forward. But I do see a lot of excess risk, a lot of naked put selling, a lot of buying stocks that are strong, and selling stocks that are weak, significantly off the highs and lows. Like yesterday, Apple's low was $7 from here, but then there are people buying it $6 up from the low, and when it comes in 50 cents, they're like, why is the stock coming in? I'm like, it's coming in
Right.
because it ran $7. So,
Right.
there's a lot of stuff out there, and overall, the market looks relatively tame right now. Hopefully, we'll get a good trading day in. Hopefully, the market.
Well, you had a good one yesterday, and I think that's something.
Yeah, I mean,
You're not gonna,
we didn't, rip the cover off the ball. We were, slightly profitable and we have some trades hanging out there. One that's not doing well, and the other is up very slightly. But overall, my feeling is the market should fail in here. Again, the only thing leery is next week is, I think, triple expiration and the S&P dividend and the S&P rolls. So,
Right.
we got a lot of stuff going forward. The bias is they want to buy them. They always do. So, you got to keep that in the back of your mind. And, that's sort of what I see. I don't really have much to add. Oil's trading at $70. I'm short it. I'm down about 55 cents. I want to stay in this trade. I mean, it's top of the range. Got to just get through the number today, and market should fade. Other than that, I don't see much. We'll go to your favorite gold. Is
No. That's a love-hate relationship. We can go to it, but there's other things I'm more interested in talking about. But yeah, we can go to it. Here's gold.
It's down $4, so
Yeah.
it's still inside that tight range, and
Yeah.
I don't expect it to go anywhere. But what's your thought?
No, there's if you're looking at gold relative to other metals. This is the only new thing I'll add to the redundancies every day. Gold has held up better than all the other metals, semi-precious or otherwise, in their macro secular downtrends, and that's because it does have some monetary qualities to it. Yesterday, I thought was kind of interesting because silver was a little stronger while gold was not, and I've seen this before recently, and even though I think silver would lead in a nice rally, a trending rally, I think any short-term move in silver higher and gold lower are people putting on that stupid gold silver spread again, and I would expect them to get hurt again, and that's what I'm looking at today. As long as gold's above 1189, I have no trade to do on the downside, and as long as gold is below 1206 to 1210 area, I have nothing to do there. It's a range to scalp if that's what you have to do. Otherwise, I would advise not trading gold until there's a reason to do it. I think more relevant to, although not necessarily going to affect your trading today, are things that are kind of on my radar that could be beginning trends. Like yesterday, Erdogan, he appointed himself the head of their sovereign wealth fund in Turkey. So there's a guy who's probably going to, through some relative semi-comply. This is important for emerging markets, I think, when you start looking at the divergence in stocks in equity markets. Erdogan is now running the sovereign wealth fund. His first phone call, and I say this half in jest, will be to his broker saying, "What yields more than the Turkish lira? Buy it." And that's the first thing. The second thing is they're probably going to raise rates, although I don't know if they would raise them higher than their current inflation rate. So they're at least going to start giving the impression that they're complying. That's the first thing on my radar. Just emerging markets are going to start buying U.S. stocks, which is just like the last people in. The second thing on my radar, I think, is a comment about the FANGs that you made. There's nothing but bad news coming out for these stocks, and that's maybe that's a little hyperbolic, but now the EU is considering putting a 4% revenue tax on Apple, and I mean not Apple, on the social media stocks because they're not complying with censoring is the wrong word, but they're not policing terroristic sort of social media comments. So all this bad news comes out, and I'm not saying Facebook hasn't taken a massive hit, but these stocks are holding up in the face of bad news. So as a day trader or as a person who's actively trading, I got to wonder how they're going to react when good news comes out. It could be like a massive, rally blow off. I don't know. What are your thoughts on that?
I'm definitely not bullish. I'm sitting waiting to pounce. My thoughts are that these stocks look very toppy, but again, they could be toppy for a month. We don't know. So we want to be able to frequent in these markets, not get killed, and chip and chop until we see the bigger trade. But my trade would be to lean on the short side here. But you're right.
Well, if I don't have a bias on these stocks, but if I had your bias, I think my conclusion would be, not trading like you, but with your bias, I would wait for that good news to come out and sell the shit out of the spike. That's just the way I would look at it, because they won't go down on bad news. They will go up on good news, and that might be a blow off top. That's the only thing that I would have in the back of my mind.
You know what? I would tend to agree with you, but I will say, as the same thing with how all these naked put sellers are rewarded, it's the same thing in the market now. You don't get blow-offs. They're just gonna drip and drip and drip and drip and go higher, and you
Right.
look up and they're up 5%. But it doesn't come in one day or 1 hour. It's just a drip. It's like the S&P. We're up
Well,
the S&P is up 8% for the year. If we had a 4% pullback, which would be 120 handles, it would take us down to like 2760 or 2770, where we actually were about a month and a half ago. the place would blow up. Okay, there'd be blood spewing on the street. So,
Right.
what leads me to, I mean, I wouldn't even call it, being upset, but just being shocked is that these guys are never tested. They're just never tested. It's just an easy road. They're going to come in with the S&P up 6, 8, 10, 12, whatever the number is, and they're going to be cashing checks again. And, it's the same thing. I think Tepper comes on today or tomorrow, and I'm sure he's bullish because he's always bullish. But
Right.
he's the same guy that said, 1,500 spook points ago, or 1,000 spook points ago, hold on to your hat.
Right.
I'm scared. So these guys change like the wind. It'll be interesting to see what he has to say. He's been long all these tech names. I don't know how much he plays in the FANG, but I know he was long Micron. That thing is $20 lower. I'm sure he's out of it. It would be interesting to hear, what he has to say. And I think that's either today or tomorrow that he's coming on CNBC. And, overall, that's sort of it from here. I know you wanted to talk about yesterday. The Opportunistic Trader had some print. We were.
I think a little plug is. I think a little self promotion. I think is appropriate. I mean, look, when you're running a site and you're putting out your trades for all to see, and you're 50 to 70% winner, per day, and people can see that transparently. Some people start to take notice, and they go, "Oh, there's Larry," and CNBC is, you're on their radar now, because I don't think they really have any reasonable people of late that will come in and warn of things on the downside. Your comment yesterday, I think, was about when last time we were at 3%, we had a little sell-off in the stock market. We should all just be aware that could happen again.
Pretty much. Yeah, pretty much. I do. Again, as we've said, it's funny to me because I've always traded bonds, and I literally have not made a bond trade in months because there's nothing here. I even skip over it in the morning. It's on my board. It's I
don't even look at bond prices anymore. I look at the yield. It's so ridiculous. I can't.
It just doesn't.
I can't wrap my head around it.
They don't move, but they will. I mean, they will. So 3% is our level to enter on the 10-year on the short side. So we'll see you next time at 3 how that works.
Right.
And so we talked a little bit about that, and just a little bit about what we've been talking about on the air. Every day is the divergence between the emerging markets and the actual regular European markets against the S&P. So
we put out a post. Actually, the Opportunistic Trader reprinted a post by I forget the gentleman's name. Alex starts with a G, market philosopher, and it was a very thoughtful post. I think people should take a look at it, especially if you're a person who is having a hard time wrapping your head around the math. Like, why is this divergence happening? Why is this happening? If you read that article, you get a good idea, I think, of the contrary point of view that's not necessarily bullish on the divergence continuing, but just says, hey, when you're a bank, say the Swiss National Bank, and you can print fiat that costs you nothing, and then you can take that fiat and you can buy U.S. stocks because it is safer than an emerging market stock. Well, then you have your reason why things are going the way they have been and may continue to until they repeal the last law of math that matters, division by zero, giving someone a positive number. Then you can kill yourself for not understanding what's going on. I'm just saying that,
that was very deep.
I'm sorry. I'm sorry. I definitely overthink things.
I only went to Syracuse University.
Well, I'm a college dropout, Larry. I'm a college dropout. Okay. But
that's not a bad, let me tell you what, that's not a bad thing.
I'm 4 courses shy of my degree in finance. That's why I know so much about finance because I quit. All I'm saying is you know, when you say I'm shocked, I can no longer say I'm shocked. I can't say, it's like, I am not shocked anymore. I am still surprised. It's like I'm starting to, be numb to what's going on. Oh, the Swiss National Bank prints Swiss francs. They buy U.S. stocks. U.S. stocks go up. United States prints dollars and just kind of gives a little bit at a time to the emerging markets, just enough so they can survive. It's almost like the emerging markets are the underclass of the world, almost like the poor are in the U.S., and they're just going to be the last, to buy the highs. And I just don't know when that is. That's the problem, isn't it?
Yeah. Well, it's interesting. I see, as we've been talking, everything ticking up, bonds ticking up, oil ticking up, S&P ticking up. So I guess, the quant programs are in again, buying everything. So we'll see. It's only 8:30. We have an hour before the opening. I'm pretty through here as far as, covering all of the stuff that we wanted to talk about. I don't know if there's anything left that you'd like to talk about. But if there is, let me know. Otherwise, I'll click back on, before the opening with an opening recap. I've kind of
I would just say the only thing we didn't really touch on, but is definitely something on the radar, is there's headline risk with Canadian NAFTA stuff. There's headline risk with the FAANGs if something comes out of Europe or the U.S. And there's headline risk if Trump has access to a keyboard. So, keep those things in mind.
I mean, it's funny you brought up NAFTA. We didn't really talk about it. And, it's, I actually, unfortunately, was up early and I was watching the news and I saw
PPI's out. That's I think that's part of the reason for the rally.
Oh, was it? Yeah, we didn't really move too much.
It's 2.8% after a 3.2% expectation.
Right.
So, actually, the only thing I did want to say and throw this at you and then let you respond is the markets the futures markets on rate hikes are pricing in 2 rate hikes at a very high level, like the highest they've been all year. And meanwhile, stocks are making a new high. So, something's got to give. Either stocks have to come off or that probability of a rate hike has to come off. I don't know.
Well, maybe they could raise rates and the market just keeps going up because the market, listen, I listened to 5 or 6 years of the reason they're buying is because the Fed is easy money and they're printing money and now they're actually unwinding the balance sheet and raising rates and the market's still going up and they're saying, I don't know what they're saying, but they're saying something for the reason why. So that being said, I'm not sure how the whole thing plays out, but obviously the Fed is.
Our job is to trade the levels,
yeah,
and keep our powder dry, which is what you've been doing.
Yeah,
and
listen, we've been, I guess everything is a little bit of luck, but we've been lucky, to really see the tape pretty well. Over the last month and a half, trades have been working. Obviously, not every trade works, as you know. You just have to manage the risk, and that's sort of where I sit. Looking at some equities, I'd like to sell Apple either into or after this call because I don't think it's really going to be innovative in any way.
Well, they have their announcement coming out, and this might be a classic by the rumor, sell the news type of situation.
Yeah, I just don't think they really are going to do much, but we'll see. And overall, markets are basically unchanged after ripping yesterday off the low. What was interesting yesterday, though, on the S&P was we traded through like a 6 or 8 week low. On the SPOO, we took out like 67. And then the market just turned at 9:30 and went straight parabolically up. So, they don't even sit down there for any period of time to make anyone sell. So that being said, that's what I saw yesterday. As far as today for the site, we'll have Joe Vaklovic at 9 talking about grains. Today is interesting day for the ag space. There's the crop report, big announcement at 12, and that's usually really market moving. So it'll be interesting to see what his take is on that. He comes on at 9. Then at 9:50 Tony Greer joins us from our equity chat room. Tony Greer Macro is his site. He comes on, talks about equities. He's really been on top of a bunch of different sectors. I'm interested to see what he has to say today. And then at 10:10 we have Phil Flynn today from the Price Futures Group, talking, who's always on Fox, by the way, who will be talking, everything from equity indices to commodities. And Phil I've known for 30 plus years, and he's been unbelievably insightful, especially in the oil markets. And I know he's a big oil bull, so it'll be interesting to see him come on today. He's been bullish oil basically for 2 years or 3 years, and
Right.
it's working well for him. So he's on at 10:10. And, that's pretty much the schedule. We might have some special guests at some point during the day, but they're not scheduled in. And, other than that, we'll see you in the chat. I'll be in the chat all day, and I'll come back on pre-opening. And I wish you a good trading day. And you could leave me with any thoughts if you have any.
Go with God, whoever that God may be. Or via con Dios to our Mexican friends.
All right, Vince. Listen, have a great day.
Thank you, Larry. You too.